What if I told you the CIA was rumored to have created Bitcoin? And Tucker Carlson says he's not buying Bitcoin anymore. Meanwhile, Netflix just tanked 10% after earnings, and investors are bracing for the rest of the Magnificent Seven to report this quarter. And today, one of the biggest crypto meetings of the year is happening in Washington. Senator Cynthia Lummis is front and center, pushing the real digital asset legislation to the front. Oh, and by the way, the fear and greed index just hit 24, meaning extreme fear is in the market. That's usually when smart money gets greedy. Let's break it all down right now. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. So happy you're here. This is where we break down the biggest financial news, Bitcoin insights, and of course, market trends so you can stay informed, stay disciplined, and as always, stay ready for opportunity for your money and your family. Let's dive in. All right. Let's start with the headlines. Lighting up the internet. Tucker Carlson just said he doesn't trust Bitcoin. He claimed that the entire narrative around Bitcoin might have been manufactured by the CIA, implying that it's some kind of controlled opposition to traditional finance. That's wild. Now, here's the thing. Tucker's skepticism isn't new. Mainstream figures have basically always been cautious about Bitcoin because it challenges everything they know about money, everything they know about power, and everything they know about control. But these comments, well, they went viral for a reason. Why? Because the idea of Bitcoin being a government project gone rogue sounds wild enough to trend. And it touches a deep fear. What if Bitcoin isn't a decentralized thing that they believe it is? Let's clear this up right now. There's zero evidence verified of any CIA involvement in Bitcoin's creation. Bitcoin's white paper, code, and community are open source. Anyone can audit them. What we do know is that Bitcoin emerged out of the 2008 financial crisis when people lost faith in banks and governments. That's not a conspiracy, that's history. And I'm a history teacher. And ironically, while Tucker's comments sound like a warning, they might actually bring more attention to Bitcoin. The Streisand effect. Criticize it publicly, and people go Google it, learn about it, and end up buying it themselves. So whether you agree or disagree with Tucker, here's the takeaway. Every time a mainstream voice attacks Bitcoin, it amplifies the conversation. And that's bullish for long-term adoption. And this is not political, so just so you know. Now, let's shift our focus to Wall Street because what happens there often sets the tone for Bitcoin and the entire crypto market. Netflix stock just took a hit, dropping 10% after its earnings report, wiping out billions of dollars in market cap overnight. You see, investors were concerned about slower subscriber growth and cautious guidance heading into the holiday season. But Netflix is just one part of the story. It's part of the Magnificent Seven, the seven mega cap tech stocks that have been propping up the broader market. Apple, Amazon, Google, Meta, Nvidia, Tesla, and Microsoft. With Netflix already showing cracks, all eyes are now on Tesla's reporting today after hours, followed by the rest of the Mag 7 throughout the quarter. These earnings are more than just numbers. They are windows into the health of corporate America, and they drive overall market sentiment. So why does this matter for Bitcoin? Well, because Bitcoin is a risk-on asset, and its price often mirrors broader market risk appetite. When mega cap tech falters, investors pull back on risk assets. Liquidity tightens up, and Bitcoin often feels that pressure first. But here's the flip side. If the Federal Reserve signals easing next week, all that pent-up liquidity could continue to flow back into risk assets, including Bitcoin, which fuels potential rebounds and sharp upward moves. I believe that's going to happen, but we'll see. I'm no mind reader. I have no crystal ball. I'm just, thinking of it myself. But this week, watch big tech closely. They're really deciding what's going on in terms of liquidity and Bitcoin's short-term price, and everyone's watching the market, especially that Mag 7. Remember, volatility in tech often precedes volatility in crypto, which means opportunities for disciplined investors who understand the bigger picture. Now let's talk about, what might be the most important crypto meeting of the year happening today. Lawmakers, regulators, and industry leaders are meeting to discuss the future of digital asset regulation in the U.S. They actually already had it today. And right in the middle of it is Senator Cynthia Lummis. If you've been following her at all, you know she's one of the biggest Bitcoin advocates in Congress. She's been fighting for clear, smart regulation that always innovates to thrive while protecting consumers from bad actors. Though I'd imagine she's a little biased. I'm sure she owns a lot. The key topics on the table today include stablecoin, oversight, and how they'll be backed, custody rules for institutions holding crypto, and possibly a bigger, broader framework for Bitcoin's ETFs and exchange-traded products. This meeting could shape how Wall Street, banks, and investors interact with crypto for the next decade. It's a massive moment, especially as BlackRock's Bitcoin ETP just launched on the London Stock Exchange this week. The world is moving toward regulated Bitcoin access, and that's a good thing. And the U.S. is trying not to fall behind because we've already seen what happened through this wash trade liquidation scheme. If Lummis and others can push through balanced policy, we could finally see the U.S. take a leadership role in Bitcoin adoption instead of chasing headlines from abroad. All right, let's dive into the market sentiment, specifically the Fear and Greed Index. Right now, it's sitting at 24, which signals extreme fear. But what does that really mean for Bitcoin and broader markets? I'm going to tell you. The Fear and Greed Index, for those that don't know, is designed to gauge the collective mood of the market. It looks at volatility, trading volume, social media trends, dominance, and even Google search data. Essentially, it tells us whether traders are panicking or getting greedy. Here's the psychology behind it. Let me help you. When the index is high, that's extreme greed. Investors are overconfident, buying aggressively, and sometimes taking unnecessary risks, leverage, margin, and so on. Historically, this is often where a warning sign that markets are overbought and could see correction. When the index is low, that's extreme fear. People are panicking, selling out of worry, and markets feel unstable. But historically, this is when the smart money quietly accumulates. Now, there's no guarantees, but think back to 2020 when Bitcoin crashed below, to the bottom. Everyone was panicking. Headlines screamed doom, retail traders were scared, but the extreme fear created the perfect entry point for long-term Bitcoin investors. Fast forward to last year when Bitcoin dipped below 20,000. Again, fear was at its peak. And guess what? Those who stayed disciplined and calm ended up accumulating during one of the best buying opportunities of the cycle. I know I was afraid, so I can't imagine what everyone else was. But here's the key takeaway. You can't control the headlines, but you can control your mindset. Extreme fear is temporary. It's the market shaking out weak hands, creating opportunity for those who with patience and discipline. So, when you see the index at 24, don't panic. Ask yourself, am I being influenced by short-term headlines, or am I thinking like an investor? Fear can either be your enemy or your greatest ally. It all depends on how you react. And remember, nobody has a crystal ball what's going to happen, especially when it comes to crypto. But have discipline, have patience, because that's going to beat panic every time. Those who act calmly when others are fearful often come out ahead, building positions quietly while the headlines scream chaos. So, let's recap. Tucker Carlson is stirring debate about Bitcoin's origins, but that just fuels more awareness. Netflix drops 10% as investors shift their focus to the rest of the Mag 7, including Tesla's earnings that was after hours, where I know it dropped 5%. So we'll see if it bounced back. And then we have Cynthia Lummis is leading that crucial government discussion on digital assets, possibly shaping crypto's next regulatory chapter. And the Fear and Greed Index, sitting at 24, tells us markets are scared. But seasoned investors see that as a green light for long-term accumulation, but never for leverage or margin. That's never my recommendation. Well, anyways, remember all of this is for educational purposes only. It's not financial advice. I want you to stay informed, but not influenced, not by me. Now, I want to hear from you. Do you think Tucker's comments will hurt Bitcoin's reputation or actually help drive more awareness? And with Netflix dropping and Tesla on deck, how do you think markets will react this week ahead? Drop your thoughts in the comments. I read every single one of them. And if this breakdown really brought value to you, hit that like button, subscribe if you haven't already, and share this channel with someone who loves Bitcoin and financial news just as much as you do. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.